Alright, hey traders, it's May 30th, 2012, and today's video is a market update and some updates on my current positions. So, as you guys know, we've been moving lower today heavily in risk-on assets. Uh, the US stock market is falling sharply with the S&P down 1.5%. The German market, the DAX, has been hit pretty hard today, looking for new lows in the DAX. Let's also take a look at the FTSE in in Britain. So you can see FTSE's been also breaking down lower. So this isn't a good sign for U.S. stock markets. We should actually see probably a move lower further in equity markets. Unfortunately, I won't be able to take advantage of that because I puked out my shorts indefinitely at around the 1325 level yesterday, as I didn't like how the market was holding up, even on that Spain news we had yesterday at around 11:30. So oil is continuing to just get destroyed. We've fallen from 92 yesterday to 87.5 around the low today. Um, you know, there's really no stopping oil right now. Let's bring up a continuation chart. You can see we've broken below the 90 level. The next support level I see is around 85. And if I draw a line here, you can see back why there's been some support there. See back here before the major pop we had in 2011 off of the Middle Eastern debacle, and then you can see this explosion off here in October of last year. So oil can definitely sell off even further. This has been a huge move in oil. I think the largest down month we've had since '08. So big move lower. That's indicating economic slowdown around the world. And that's furthering sell-off in U.S. equities. So I think there's a lot more room to go lower, and I am looking to basically re-enter my shorts at a better price. Um, I am going to basically sell short right around here for some exposure. However, I would like to get more. The 10-year note yield has hit an all-time low. As you can see, the futures contract is just at an all-time high. So this is an historical event in the bond market as well. So basically, altogether, we've been just seeing lots and lots of risk-on selling. Not so much in equities, but it's really been shown in commodities like copper and oil, which are really at month lows and year lows right now. Gold is also getting hit a bit. It's recovered most of its losses of the day. You can see it rallied back. So this market is indicating that we're pricing in a potentially a slowdown in the economy, or potentially a breakdown in the Eurozone once again. You can see the Euro is now below this major area at 125. Basically is a huge area. We're now below it, and we could potentially see 2010 lows, and if we get down there, that could cause some great havoc in the market. The last time we've been there, really, except for 2010, was back in 2003, 2004. So it should be a major move if we get down there. We could see some basically program selling. You know how we get below a major level in the euro, it feeds off into other risk-on markets as the dollar continues to rise. And here's the dollar chart right here. You can see it is also attempting to approach these highs at around the 90 area. So if we get up there in the US dollar, that could indicate some extreme fear in the market, as the US dollar is seen as the market of last resort. People move into cash when there's lots of fear. So we could definitely see that. Should be interesting. We could see a major move in equity markets once again. I would not be surprised if we break down once again to the 1200 area, as every move push higher we've seen has been successively weaker. You can see. So that's indicating some weakness on the chart right there. So once again, I'm bearish risk on assets. I got bearish basically in April or so, mid-April, right around these levels, and I'm expecting further momentum lower. So looking to enter bearish positions to take advantage of a potential move lower. However, in the short term, there is the risk of a bounce due to basically markets like oil and copper being very oversold. So that's something to watch out for. But in the end, I do think that the trend is lower and that we could see some further momentum to the downside.